Good morning, Bookmap community. Welcome one, welcome all. My name is Charles. I'm an ES trader and a member of the Piratetraders Brigade. We're a community that is focused on the ES, the NQ, and how it moves through the two-way auction process. This morning, we're going to be focused on the ES and the NQ to figure out what they just might do today. So when I say I'm focused on the two-way auction process, what is it that I'm talking about? There is a constant competition between buyers and sellers. The more buyers there are, the more price will go up. The more sellers there are, the price will go down. If there's about the same number of buyers and sellers at any given moment in the market on any given time frame, the market will go sideways. And that is what we have here. We had a lot of momentum to get us to all-time highs last week. But as soon as we got to those all-time highs, the market completely ran out of steam and started going sideways. The way the overnight traded over the weekend increases the odds in my mind that we're going to get more sideways to come in the days ahead. So I'm going to walk you through the scenarios of what you would expect to see and why. But first, because it's the beginning of the week, let's start by zooming all the way out and giving ourselves some perspective on what's happening in the market. The way I like to give myself perspective is by doing what Jim Dalton calls the top-down approach. So I start with monthly candles, work my way down to weekly and then daily to see are there insights that are happening on larger time frames that might give me information for a shorter time frame. Okay, so to start with, I'm looking at the monthly chart. We can see on a monthly time frame, the market broke above previous all-time highs, created momentum for several months to the upside, and we've now been going sideways for the last 2 months. Okay, so we had 1 month. Let me get my drawing tool up here. Ignore. All right, so we had momentum. Now we've had balance for the last 2 months where the market has been balancing off. Now there are two ways that the market can balance. It can balance with time, going sideways as long as it needs to go, or it can balance with price, pull back as much as it needs with price, and then it can turn around and head higher. At this moment in time on the monthly chart, either could be happening. Okay? So that doesn't give us a ton of insights. It could be bullish if we get continuation higher this week above last month's monthly high, or it could be bearish if we can't get back above last month's monthly high, then we might need to pull back towards last month's monthly low. So let's zoom in and take a look at the weekly for more information. So again, we can see the same pattern here happening on the weekly. The market pulled back with price over 3 weeks, and then turned around and created momentum again back towards those previous all-time highs over a 4-week period of time. So the weekly chart will give us a better indication of what's happening on the monthly. If this week, throughout the week, we get above last week's high, which is the current all-time high, and we find new buyers up there, that is a continuation of this momentum on the weekly. Okay, so new highs on the weekly time frame increase the odds of continuation higher on the weekly time frame. Okay, if we can get above last week's high and find support, not only is that bullish on the weekly time frame, but that increases the odds on the monthly time frame that this was just a pullback with price and that we can continue higher. So in either scenario, getting above last week's high is bullish. Bringing in new buyers and staying above last week's high is bullish. And in both scenarios, it is less bullish if we cannot stay above last week's high. So then we might be saying to ourselves, all right, if we can't get, above last week's high and stay above it, where might the market go to the downside? Well, then the target becomes the weekly low. As long as we stay above last week's low, any scenario where we get above last week's high and stay above last week's low is bullish for continuation. If we start to get below last week's low, that is bearish for a bigger pullback. Okay? So now let's zoom in and take a look at the daily for insights we might see there. I'm going to go ahead and throw on the moving averages as well real quick. Okay. So if we look at the daily, we can see it wasn't a straight line to the upside. On the weekly, it seemed like this thing just went straight up. But on the daily, we can see we had a move to the upside, and then we spent time going sideways. Move to the upside, spent time going sideways. Move to the upside, and now we are spending time going sideways. So this is a version of balancing with time. Instead of getting a pullback with price, we're using time to create momentum and continue higher. That is bullish to see. As long as we continue to do that on the day time frame, we should assume the momentum will continue. Okay? So when we're looking at the daily chart, we can basically look at the high from Thursday, which is the all-time high, and the low from Friday, and we can say that is a balance area. And as long as the market remains inside that balance area, or it looks above or below and fails, so it could go to the all-time high, but it can't stay up there, it pulls back in, or it could poke below Friday's low, but it doesn't stay there, it pulls back in. In any of those scenarios, stay inside or look above or below and fail, we assume the market has continued to go sideways. We don't know how many days it will need to go sideways. There have been times in the past where we've gone sideways for 2 days and continued higher. There are times in the past where we've gone sideways for a month and then continued higher. Okay, so we can't know exactly how many days it's going to have to go sideways, but as long as it's inside that range, Thursday's high and Friday's low, it is likely to continue to go sideways. Okay? Really quickly, we'll just look at the moving averages. I always like to watch the 20, 50, and 200 simple moving averages on the daily time frame. They give us context as to what is happening, sort of bigger picture. Both as potential support or resistance levels. So you can see here in the past, the 20 was acting as support. And when it broke, that led to a larger pullback in price. Okay, so they work as support and resistance levels, but also just how they interact with each other. When the 20 crossed over the 50 to the downside, that was a little bit bearish to see. But as you can see, it is now almost ready this week to cross back over to the upside. If we have the 20 moving average, which is the red one, above the 50 moving average, which is the white one, above the 200 moving average, which is the blue one, that increases the odds that the market has momentum and can continue to the upside. So let's just zoom back and see the last time this happened. The market was in balance and it was going sideways in a range, much like we are now. That 20 came back through that 50 and crossed to the upside, and the market had a lot of momentum higher from there. 4 months of momentum higher from there. So we haven't crossed yet, and we will need to wait a day or two for confirmation. But if the 20 crosses the 50, that will be bullish to see. And it could end up playing out something like this, where we go sideways for a while, and then we start some serious momentum to the upside. So now that we've looked at the daily time frame, let's zoom in. Let's look at the market profile chart, which will give us sort of intraday levels to look at. The first thing I'm making note of when I look at the market profile chart is that we have left an insane amount of weakness behind. We have multiple unfilled gaps that need to be backfilled. We have just a billion weak references that need to be backfilled. We have single prints from Wednesday's range that need to be backfilled. I mean, just all across the boards here, there is what we call weakness. Weakness increases the odds that the market will pull back with price to repair off that weakness. So you say, but Charles, the market keeps going higher. They left behind all this weakness. They just went sideways and then they continued higher. They left behind all this weakness. They just went sideways and they continued higher. Well, that is what we call when what should happens doesn't. If the market should pull back with price because we've left behind so much weakness, but it's not pulling back, it is instead pushing to a higher price and then going sideways at that higher price and then pushing up again, that is a sign of momentum. So whilst we do have a lot of weakness below, the fact that we are going sideways at higher prices is bullish to see, because it means we don't need to pull back with price. So once again, I will just point out Thursday's high, which is the all-time high at 53.43, and Friday's low, which is at 53.06. That is the balance area. That is the area where we expect price over the days ahead to bounce around inside that range. Breaking out of that range one way or to other will give us insights moving forward. So now that we've gotten to the lower end of the range, the higher probability is that the market wants to head back up to the high. It wants to head back up towards those all-time highs and look for sellers up there. If we get to those all-time highs, we look above and we pull back in, it means we need to spend more time going sideways, and that increases the odds we're going to pull back down. If we get above those all-time highs and bring in new buyers up there, that is bullish as a breakout of a balance area looking for momentum to the upside. So what happens at 53.48 will tell the tale moving forward. Do we get momentum up, meaning days and days of continuation higher, or do we get a pullback in price, meaning days and days of going sideways in this range? The same thing will happen if we get to Thursday's low at 53.06. If we look below there and we get new selling, well, that's bearish that we need to pull back with price. That's the market telling us it needs to repair some of this weakness that it's left behind. First to backfill the remaining single prints at 53.03, and then likely to backfill the gap to 52.47. Okay? So getting below yesterday's low and getting new selling is bearish for that larger pullback. And we monitor for continuation lower, however far it needs to go. However, if it looks below and fails, so if it gets to Friday's low and reverses and comes back in the range, we would expect it to keep going sideways for the days ahead. Okay? So balance areas are awesome because they give us a lot of insights. They give us a very clear understanding of what is going on. Right now, what is going on? We're trying to get back to the all-time high. So anything that doesn't do that is important information, right? If the market opens today and it starts to spend a lot of time inside yesterday's range and pull back, well, then we're less bullish. Then we're thinking maybe we need that larger pullback with price. If it opens today and it heads up towards the all-time high at 53.49, well, it's just business as usual. It's just what we would expect to happen. We're not going to get overly bullish because we know we may just poke above and fail and come right back down. Okay? The trick to balance areas, whilst they're awesome because they make it very clear to understand the mechanisms that are in play and what might come next, is the market will chop and grind like crazy when you're inside a balance area. Friday is an example of that. We pushed up to those new all-time highs. We went sideways for a few hours, pushed lower, went sideways for a few hours, and then liquidated in the last few minutes of the day. Then the overnight went nowhere all night long. It just went sideways. Then the regular trading hours opened and went sideways all day long, liquidated down, retraced, and then spiked up at the end of the day. So this type of behavior that's very choppy, difficult to enter trades because it will constantly stop you out before it does whatever it's going to do. This type of behavior is normal inside the balance area. So we know right now the higher probabilities that we're heading to the all-time highs, but we don't expect it to go in a straight line. We expect it to be choppy and grindy and just an absolute mess. Okay? We got 15 minutes till the market opens. I'll be able to give some better ranges at the moment the market opens because there is a big difference, and we're dancing right on top of Friday's high right now. There's a big difference between opening inside Friday's range or above it. So if we open with a gap up, that is more bullish to see, increasing the odds of momentum up. If we open above 53.26, that is bullish, but not quite as bullish as a gap up. And if we open below there, well, that is the least bullish scenario. It's not bearish, not at all, but it is the least bullish scenario. So we got to give the market the next 15 minutes and figure out where we're going to open before we can be absolutely sure how bullish we should be this morning. But I would say, in my mind as of now, the higher probability is a choppy journey to that all-time high at 53.49. If you have not yet, please smash that thumbs up button. It makes me feel good on the insides, gives me the warms and fuzzies, as well as it lets Bookmap know they should keep creating content like this for you. You appreciate it, you want more of it, smash that thumbs up button, okay? Let's take a look at the NQ. So I'm not going to zoom out and do the monthly, weekly, daily like I do on the NQ normally, because it's just in lockstep with the ES. Sometimes these markets are kind of playing push and pull with each other, and sometimes they're just perfectly in tune and perfectly in lockstep with each other. I would say right now it is perfectly in lockstep. So I would literally use my analysis the exact same way. I would say the balance area is the high from Friday, around 18,770, and the low of the balance area is the the high from Thursday, and the low of the balance area is the low from Friday, 18,546. That is a weak low, okay? Because it reversed exactly to a tick at a base of single prints from Wednesday of last week. So that is a little bit of a magnet pulling on price right there. But as of now, because we tested it, the higher probability is we're heading back up towards the all-time highs. So I would expect the same thing here as I would with the ES, that the market is going to go sideways inside this range over the next few days. I am less bullish, though, because the NQ did not open with a or close on Friday with a spike up. Okay, so the NQ doesn't quite have as much momentum at this moment when the market opens as the ES does. So I would expect more chop and grind and sideways. Okay, so both markets are bullish to test the all-time high. Both markets are expected to go sideways on the way up. Trade with caution. Expect volatility, expect instant reversals, and tight ranges. Any questions from the chat? Any questions? Also, I'm noting real quick on Bookmap, large node of liquidity. This has been down here forever, around 52.50. That is still there, and large node of liquidity up at 53.62. As long as both of those are still in the books, the probability favors sideways for the market. Okay? If one of these randomly disappears, then the market will move to the other one. But as long as they're both there, I suspect the market wants to go sideways. Any questions? Nap, good morning to you. Welcome. Bill K is here. DNK is here. Will, good morning. Jay in the house, good morning all. Another day in paradise. Bernie, morning folks. Tom is here. Good morning to you. Tom says liquidity is typically better in value, which is why it chops. It's not about liquidity. It's about, what's the word for it? It's like about uncertainty. So when the market is in balance, half the participants are bullish. They think the market should keep going up, so they're going long. And half the participants are bearish. They think the market should go down, so they're going short. And so when the market is in balance, it's one of two things that's causing the balance. Either very hardcore tug of war, buyers pushing, sellers pushing, buyers pushing, sellers pushing, or the opposite, no one doing any business, right? And as soon as it gets up towards the upper end of the range, it runs out of buyers. As soon as it gets down towards the lower end of the range, it runs out of sellers. And so it just kind of keeps ping-ponging between the two. So it can either be that aggressive tug of war, one side trying to break the other, or just kind of a lack of business one way or another. So what will happen with liquidity and volume, when it's that tug of war, you'll have high liquidity and high volume. When it's that, uncertainty and nobody wants to make a bet, you'll have lower liquidity and lower volume. Okay. So it's more about the psychological uncertainty of the participants than anything else. Trevor in the house, good morning to you. Terminator is here. He says, cool. Thanks. NQ, please. Gold, please. Mr. Ree, good morning to you. Yeah, we can take a look at gold on the daily. Let's see what's happening with the shiny metal. Yeah, so gold is looking good. It's honestly very similar to the ES. Made all-time highs, came back to retest it. Now you're balancing at those all-time highs. I would say there's a channel that looks something like that right there. So assume you've just tested the upper end of that channel. You are likely to pull back down, okay, to test the opposite end. If you can find support in there, you look for continuation. So you could either look at it as horizontal balance around the all-time high, which isn't established yet, but could happen, right? It could go sideways up here for a little bit. Or you could look at it as a channel. Draw yourself a trend line. And look to test that downward trend line. I'm guessing somewhere in the ballpark of 2,402. I don't think it's going to go straight up, though. You got some wicks over here. So this is an area where the market has run out of steam in the past and needed to balance. Getting there again, it would make sense that it spends a little bit of time balancing. Okay. Bone Man says, so far, so good. Happy to hear it, Bone Man. Griff, good morning to you. John says, if they pull a big liquidity level, can you explain why it would move towards the other one? Okay, so any large node of liquidity, so that is any level that you would see on the Bookmap with very dark coloring to it, that serves as a magnet for price. Now, it's a little bit tricky because sometimes it's a positive magnet that is pulling price towards it. Sometimes it is a negative magnet that is pushing price away from it. And the only way to really guess which is this the magnet pulling price to it, or is this the magnet pushing price away from it, is to see when that liquidity was entered in the order books. Okay? So I'll just use this liquidity right here as an example. It was thinner over here, then thicker, then thinner once again. So where did the changes in liquidity take place? There was a change here, and there was a change here in that node of liquidity. So what happened with price in that time? Well, the liquidity got darker as the market was pushing up into it. It also brought it in right here too, but we'll focus on this node up here. Okay. So as price was moving up, they were adding more and more and more contracts above. Well, in that case, they were trying to push the market away. They were trying to push price the other direction. Okay. So then if we look and see what happened once price started to push away, once it reversed and started to move a different direction, what happened to that liquidity? It suddenly started to get thinner. It suddenly started to disappear. Okay. So sometimes liquidity can act as a magnet that pushes price away. If you need a psychological explanation of it, just imagine somebody who was going long were to decide, oh, we're only going to get to 53.40 and we're going to get smacked down. So fuck it. I don't want to be long anymore. Right. There's just something about seeing that resistance above that makes them think, I don't want to mess with that. Okay. So when you're looking at large nodes of liquidity in Bookmap, you're always asking yourself, where was price moving when that node came into being? Let's say that this had been different. Let's say that the liquidity had been thick in here. So we had thicker liquidity in here. It got thinner, and now it was getting thicker again. Well, that means they were trying to use that to pull price to it as a target for the market to take profits. And as soon as they started to make it thinner, the market pushed away and then they brought it back. Okay. So that's just in general throughout the day, no matter what time frame you're looking at, whether you're a scalper that's watching how it changes second by second, or you're more of a day trader paying attention to the larger nodes that are shifting throughout the day. Just keep track of which direction is price going as that liquidity enters the order book. Okay. So then you've got this idea of sometimes there's just resting liquidity that is just sitting in a certain location. And maybe it's there for days or even weeks at a time, and it's just sitting there. Well, that is trying to stop the market from doing something. Generally speaking, if it is a giant node of liquidity below, it's trying to stop the market from running too far away to the upside. Now, that doesn't mean you can't go up with a large node of liquidity below. You can, you absolutely can. But you won't get these crazy days where the market makes huge ranges and completely, leaves an old area of business. If there's a giant node of liquidity below, it's like a magnet that will prevent the market from being able to run away too far. It's kind of tugging on it, keeping it from running away too far. If you have those large nodes of liquidity on both sides of the market, it means they just want chop. They just want it to go from one side or another. So if suddenly one of those large nodes disappears, that large node on the low disappears, then that large node at the high becomes the magnet to pull price to it. Okay. I know it's a little confusing. Replay that about 5 times and it'll probably make sense. We got 1 minute till the market opens, and we are sitting right on top of yesterday's high. So this is bullish, but it is not the most bullish scenario. The most bullish scenario would be a gap up. It doesn't look like we're going to have a gap, but we are opening. This is on the ES inside yesterday's spike. So we can pretty much assume the area around the base of the spike, we'll just call it the overnight low, 53.24. We can assume this is good support. As long as the market can hold above that low at 53.24, it should be able to continue higher. If it breaks below there and it starts to get new selling, we got to change our tune. We got to see things very, very differently. But as of now, when this bell rings, it is bullish to me as long as we stay above 53.24. But I'm expecting a lot of chop. A lot of sideways, a lot of grind. Let's see what happens. It's getting chopping here, so chop up all the traders. I am feeling the chop, even though it's a little bit bullish. Ugh, sorry. I'm so sorry, guys. I apologize. Good morning to Ike. Philip's in the house. Griff says, Charles, thoughts on a market pin? That is what I think it is. I think it's pinned. So for those members of the brigade who've taken my course and know about the difference between a regular balance area and a balance by pin, which is the options market artificially keeping the market going sideways, I see this as a pin. So I expect a lot of reversals at exact references, a lot of tight ranges. And whenever the market makes a move, it will always be a liquidation break or a short covering. It'll be out of nowhere, and then it'll just happen, and it'll be over. So these are the least fun markets to trade in terms of entering trades, but they're the most fun in terms of understanding what the market is doing. Right now, what I think it's doing is heading up to the all-time high, but I think it will be a very choppy trip to get there. Okay, so the market opened. It immediately pushed above yesterday's high. That is bullish to see. We've got resistance above around 53.34. That should smack the market back down. If they can turn yesterday's high into support, it will be bullish. If not, more chop, more sideways, more grind. Cool Bean says, I threw my favorite sweatshirt in the laundry basket on accident last night, and now it smells like socks. Well, you know what you should do then, Cool Beans? Put it in the laundry machine and turn it on. Instantly fixes your problem. The Ghost is here. He says BTC. Let's look for resistance here at 34. If we get it, I'll take a look at BTC. John Q says, careful, YouTube might flag you singing that close to the original. Oh no, John, that didn't sound anything like the original. That was a hyena singing the original, which is not copyright infringement. Good morning, Willie T. Welcome. RP says thick liquidity came in at 32.33. Oh, between 32 and 33. Yep. And then it instantly disappeared the second we got to it. So they were trying to push market away and it didn't work. Okay. So now I'm expecting that we should get a little bounce here around 33, 34 area and a pullback down towards the high from Friday. No bounce is bullish, or a bounce that finds support on Friday's high is bullish. Let's see what happens. Okay, this high is way too exact. So I would consider that to be weak. I still expect we'll get a little pullback, but it'll probably find support and come back for that high, because whenever you get a volume cliff like that, where they're reversing the market at an exact level to a tick, that's bots, my friend. That is artificial selling. Tom Gunn says, thick is best. More cushion for the push it. You know what I'm saying? Okay, yeah. So we're getting resistance here, but as I said, to me, it's weak. The market is likely to bounce, but then come back for that resistance again because of that volume cliff at an exact level and the iceberg that's still there. They want to take another poke at this high, which is bullish to see. All right, let's pop over and take a quick look at Bitcoin and see what's happening there. Ooh, man, talk about a market imbalance. Bitcoin is in a almost 4-month balancing range right now. So bigger picture, on a monthly time frame, it's in balance. So what was the last move it did in terms of that balance? Tested the lows. So the highest probability is that it's heading back up for the highs, back up towards 71,000. Okay. Even shorter term time frame, zooming in even more than that. It's been in a smaller balance area the last, 2 months. And it's testing the high of that balance area right now. Okay. So pretty much one of two things is going to happen with the Bitcoin. Either it breaks above the highs from Friday, Saturday, and Sunday, in which case it's continuing back up towards 71, or it gets smacked back down today, in which case it's heading back down towards 61. So you could use yesterday's range as a breakout. You could say to yourself, I'm bullish above 67,660. Ooh, 67,660. That's a weird number. And if it breaks below 65,950, I'm bearish. And then you look for follow through one way or to other. So Bitcoin's in a choppy range for the time being. But I'd say I lean slightly more bullish than bearish. Look at this volume cliff. Why is that bullish? Can anyone in the chat tell me why having the market reverse at these exact levels is actually bullish to see? Come on, we got 150 people hanging out. Someone must know. Why are the bots reversing at an exact level? Ike says because we're above Friday's high of the day. So that is a reason to be bullish. We've pushed above Friday's high and we're bringing in new volume. But that's not what I'm talking about with how exact this one level is, with 10,000 contracts trading at one exact level. Why is that bullish? Griff got it. The stop's above. Each time they reverse the market at this exact level, again and again and again and again and again. When it pushes away, which is what it's doing right now, sellers start to pile on. People are thinking it's a double top, it's a triple top, it's a quadruple top, and they're shorting right now. And the further down the market goes, the more of them that short. And they sell and they sell and they sell. Where do they put their stops if they're shorting right now at this moment? They put them up there above that high. So the market gets the push away, but then immediately comes back through and takes out all those stops. So why are the bots doing this? They're creating liquidity. They want to create some liquidity above. So I would describe that as a very weak high. Frito says, bot's gonna bot. Exactly. That's just what they do. They bought it up. They bought it in, they bought it out. Tappish says, so when you have a weak high, the market tends to go back to it. What about single prints? Tappish, you got to take my workshop, man. That's too many questions. So weak highs tend to be repaired, but they don't have to. The more weak a high is, though, the more likely it is to be repaired. This is a very weak high. Single prints generally get backfilled that same day. If they don't, though, it's sending the opposite signal. So if you have single prints up and they don't get backfilled, it means the market wants to keep going up. Whenever that momentum runs out, the single prints are a target for the market to come back to. So we'll use last week as an example. On Wednesday, we left behind multiple sets of single prints. Okay? But we closed at the high. So that was a sign the market wanted to keep going up. Well, it opened the next day and it went and made new all-time highs. For the first 2 hours of the day, it went up. But then it rolled over and it started to run out of steam. Where did it come back to? Well, that day, at the end of the day, it came back for the first set of single prints. The next day, it came back for the second set of single prints. It tried to come back for the third and it couldn't quite do it. Ooh, the buyers were so desperate to get long, they wouldn't even let it fully liquidate. So the single prints were bullish when they were left behind, and then a target once the market had rolled over. And the fact that we still have some is bullish to see. All right, we got 160 people hanging out, but only 50 thumbs up for the pirate. Guys, what's the deal? I sang you a terrible song. I gave you analysis. I taught you multiple lessons, and I don't even get a thumbs up? What's it going to take, chat? Give the pirate some love. Cool Bean says, it's because you scolded me in the workshop? Wait, what did I scold you about? That's funny. Making jokes in the chat. I didn't scold you. That's so funny. No, I just said, and I wasn't even talking to you. I was talking to somebody else. I just said anything that you could do that is distracting you, you're not learning. You know? That's so funny that you took that personally. I didn't even direct it at you. Jack says, chat doesn't know how to multitask. Yeah, I just always think about when I'm trying to teach online, I always think about how much harder it is for the people watching to absorb the information. Like when you're in school, when you're in you're taking like a college course or whatever, you're sitting there looking the professor in the eye, you know, and he's busy talking. It's not like you're having a conversation with your friends on the side, but in the world of the internet, you could be watching YouTube videos at the same time. Like you could be doing anything. So I really try to emphasize when I'm teaching, focus on learning so as you don't miss stuff. Okay, so there's that liquidity. They poked up and they took out all those stops. Market says, thank you, sir. Thank you for the liquidity. So now the target to the upside is testing the overnight high, which is just above price here, around 53.38. Okay. The reason we're now thinking the market is going to test the overnight high is because it almost always, I mean, with incredibly high probability, will either test the overnight high or the overnight low. It's very, very rare that we have a day where we stay inside the overnight range the whole day. So if the market opened, pushed above the previous day's high, is bringing in new buyers, and we're guessing, is it going to test the overnight high or the overnight low? Obviously, the higher probability is the overnight high. So if we think the market is going to come test this at some point today, why not now when we're like 2 points away? So that is now the target to the upside. If we look above and fail, we get above that overnight high and pull back in, well, then we're back to a chop zone. We're back to sideways grind. If we push above that overnight high and find buyers, we're heading up to 53.42. Let's see what happens. Okay, so there's the test of the overnight high. More stops, more liquidity. Thank you, sir. So now this is the moment of truth to carry forward for the rest of the day. If the market just wants to go sideways and go nowhere today, it should look above and fail now. So it should pull back down into this overnight range and start to spend time in there. If it turns this into support, if it turns 37 into support now, it's got that momentum and it's trying to go higher. Look at those stops. Can anybody tell me what is less bullish about the move we made to the upside so far? Less bullish about it. Come on, chat. You know this. We got new buyers, but why are we not as excited about these new buyers? Griff, on it again, dude. You're the teacher's pet today. It's just stops, right? This isn't real new buying. This is artificial. They got people to short in the overnight again and again and again. They got them to short this morning once again. And now all they're doing is squeezing those shorts. These aren't really new buyers. They're just people getting out of short trades. So it is less bullish that if it's more shorts covering, because they're going to run out sooner or later. And then the Gough says testing. Exactly. So now what we need to truly feel confident is for the market to pull back and turn something into support. They never even came back to support the previous day's high, or to test the previous day's high. Didn't even test it to see if there are new buyers. Now they got above the overnight high and they did the same thing. Another short squeeze, and they haven't given it a chance to come back and test. So the more it does this, just keeps popping higher without pulling back, intraday today, I mean, the weaker it's becoming. Because they need to give those stronger hands a chance to buy a pullback, and they haven't done that yet. So once again, we are looking for support at the overnight high. So here they did it again. They created another weak high. They reversed the market exactly at the same place that they reversed it in the H period on Friday. What does that tell us? Or sorry, on Thursday. What does that tell us? They're doing it again. They're trying to make a double, triple, quadruple top here to get more stops above to get their next punch to the upside. So this is a pinned market. This is artificially moving the market around. We're not really convincing people to be bullish. We're just squeezing sellers. Why do I care, right? If I'm a day trader, I've got momentum. Isn't that all I care about? That it's going to keep going higher? Well, yeah. But if I'm thinking we're going to get to the all-time high and keep going, this is not the way I want to get there, right? If I see this as a balance area in here, I don't want to get back up to the all-time high with all short covering. Because what does that mean? Boom, we're going to look above and fail. We're going to come right back down. They're just artificially squeezing as many sellers as they can, convincing as many FOMO longs as they can to get long the market at the fucking highs so that when they come back through, they can stop all of them out on the way back down. And they can play the same game on the way down that they're playing right now on the way up. So all short covering is less bullish, bigger picture. It increases the odds. We'll get a look above and fail of the all-time high. So everything is context. If I'm a day trader and I'm long the market, do I want to stay in that trade all day long? Or do I want to take profits at the first week reference or at the poor high, at the all-time high? Probably I want to take profits sooner. I don't want to fall in love with this trade and think the market is going to keep going straight up all day because it's not real new buying. It's just shorts getting squeezed. And we can't trust that to keep going because there's only so many shorts. And once they're all squeezed, where are those strong hand buyers going to step in? Not at all-time highs. They're going to wait for that pullback. Okay? So context. Context is so important. I can't emphasize it enough. So RK just asked the question that I had answered. He probably had written it before I answered it, but he says, does it matter why it's going up when it's already up 15 points? Yes. Now, if all you're looking to do is lock in 15 points and walk away for the day, then no, it doesn't matter. You're a scalper. You made your money. You're done for the day. But if you're trying to trade all day long, the way it gets to the balance area high matters quite a bit, because it increases the odds that it's not going to break higher, but instead fail and pull back down. So it all depends what kind of trader you are. Are you taking a trade where you're looking to take profits 15 points from now? Or are you taking a trade where you're looking to take profits 50 points from now? The context of how it moves will matter depending on which time frame you're operating on. RP says, on a pullback, you were looking for an absorption of sellers first and new liquidity stepping in. Yeah. So I'm more focused on price than I am liquidity when it comes to support and resistance levels, because the liquidity will change like second by second by second. There might be a ton of liquidity sitting at 40 right now. Okay. But well, that's actually not a good example because that's right where the overnight high is. But what I'd rather look for is support when we get to the overnight high, which is about 37. Okay. So this might just disappear. Let me switch colors. This might just disappear the second we get to it. But that overnight high, that's not going anywhere. That's there no matter what charts you look at, no matter what time frame you operate on, that level is there and it will be there all day. So that's a better place to trust support. Now, once the market gets to that level, am I seeing the liquidity step in? Then I'm interested. The Go says, do scalpers need to look at the 4-hour time frame or just the 5-minute time frame? So I would say 4-hour time frame for context, right? The way I started the morning this morning, looking at the monthly chart and the weekly chart and the daily chart. Am I going to keep looking at those charts intraday now? No. Now I'm looking at the chart that is operating on the time frame that I'm entering trades, which for me is the 30-minute time frame because I'm using TPOs. Okay, same as like a 30-minute candle. So that's what I'm watching. I'm not going to keep going back to the daily over and over and over again, because then I'll just start to confuse my brain. So if I was a scalper operating on a 5-minute time frame, I would start by looking at the 4-hour, come up with a story to tell myself, what is the market doing? Is it in balance? Is it in momentum? Where's support and resistance? Where's levels where the market might reverse? I'd give myself a context, and then I'd zoom into the 5-minute candles and I'd be watching those while I'm entering trades, having that longer time frame as a context to operate on the shorter time frame. Unfortunately, the class must be dismissed. It's 10 a.m. The live stream is over. It's time for everyone to switch over and watch Bruce's live stream. Or if you're a member of the brigade, you could come hang out with me. We'll be hanging out for the next 30 minutes. I hope to see you there. Members of the brigade, it is time to set sail. Now, as far as everyone else is concerned, if you're looking for insights to carry forward for the rest of the day, go back and replay the first 5 minutes. Just take this video, scroll right on back, and replay those first 5 minutes again, where I explained what is happening with the market. Thus far, it has played out the way I described in those first 5 minutes, which is that we are in balance, meaning the highest probability is that we are heading for the balance area high. That balance area high is 53.49. and we have no idea what comes next. Do we just look above and fail, pulling right back in, or do we look above and bring in new buyers and continue higher? The way the market has moved thus far, being all stops, increases the odds in my mind of that look above and fail. Okay? But honestly, we just have to wait and see. So we got potential support here at the overnight high, 53.37. Be looking for a bounce there. If not, that node that was strong resistance at 34, they could flip the order books and turn that into support. And then if none of those hold, look to test Friday's high at 53.29 and look for support there. If they find support anywhere inside this range, they're heading for the all-time highs. With that, I will wish you good luck, happy trading, and we'll see you next Monday morning. Thank you very much. Brigade, let's set sail.